The Prime Minister last week praising 3 infrastructure and mining projects that he called nation builders, worthy of billions of dollars. It's unclear exactly what the feds will do, though, to move these projects forward. Let's find out which stocks could be winners here. We're joined by Maxim Sytchev, Managing Director in Industrial Products at National Bank Financial. Great to see you, Maxim.
Likewise.
Just to take a broad look, you say the theme of self-reliance for countries is a big part of this.
Yeah, I don't think that's going to change. I mean, part of that is obviously the geopolitical landscape that has shifted dramatically. And it's not necessarily that North America is only trying to decouple from China, from a manufacturing base, et cetera, but we're also trying to strengthen our economy vis-a-vis the Americans. So, and the other big bucket as well is that Canada and to a certain degree, U.S. has also underinvested in infrastructure over the years. So it's also part catch-up, part necessity, part resilience, and part to drive productivity higher for Canada.
Can we walk through a few stocks? What about Aecon? What's your rating on Aecon if you cover it? And
yeah, absolutely.
Sure?
So yeah, we have an outperform rating. We're very bullish on the setup right now. And it's actually one of the nuances that I feel investors have to understand is that historically, investors prefer to stay with engineering names because there's no construction risk.
Okay.
But what's happening right now is that the procurement methodology in Canada has changed, making construction blow-up potentially much less likely to happen from an execution perspective.
Costs.
Exactly.
Yeah.
So, I mean, back in the day, fixed price project, I mean, people kind of going blindly, going to ask you how much it's going to cost to build Eglinton, and somebody's going to say $5 billion is going to be 5 years. Reality is somewhat different.
Yeah.
Right now, procurement methodology has evolved much more, I would say, conducive to positive outcomes for both the proponent and the builders. And so historically, that dynamic has changed. And right now, actually, I think if you're betting on Canadian infrastructure, you actually have to own construction and not engineering names because they're mostly Canada-focused. Because if you look, for example, at WSP, Stantec, ATRL, WSP, wonderful company, and we're also very bullish on it for different reasons, but only 17% of its top line is coming from Canada, whereas for Aecon, Bird Construction, Toromont, it's 90% plus. So we're really trying to focus on names that provide the biggest lever to the thematic. I mean, ultimately, one has to know why they own the stocks in their portfolio.
Yes, you say the proponents things have got better, but if construction companies aren't willing to give you a fixed price, isn't that bad for you as a proponent and as a taxpayer?
Well, I think what has happened historically is that the push to transfer fully the risk onto the private sector resulted in unintended consequences where there were certain projects that were being let out by the government, and there was absolutely no bid from the private sector. So it's always that careful balance. Do you want to build something at a reasonable risk-reward skew, or you don't? And so, I mean, ultimately, because the government is not in the business of construction itself, that's being outsourced to the private sector, that's that tension that has to come to a fruitful conclusion, both from a taxpayer perspective, but also the private sector, which is building the actual projects.
So Aecon, the builder, which has been plagued in the past with legacy fixed price contracts, you say it looks promising here.
Yes,
yeah.
and they're getting much closer to finishing these difficult projects. I mean, obviously one of them is Eglinton, allegedly should be up and running soonish.
Yeah.
But if you look at in terms of the backlog exposure to the legacy project for something like an Aecon, it's only 1%.
Oh, that's
so it's dramatically has shrunk over the last couple of years.
Bird Construction is another name you think could be a winner. We just heard from the CEO.
Absolutely, yeah. I was just actually watching the interview with Terry McKibben. Lots of respect for the management team. We recently upgraded the stock. I think at some point, investors got a little bit over their skis in terms of potential for all of these mega projects and how that's going to result in terms of revenue growth. We stepped in after the disappointing Q2, and on the back of that, stock has recovered nicely. They announced a good transaction for piling a dredging company, which will allow them to get access to more of these nation-building projects, especially around ports. So very excited about that. Great balance sheet, great management team, dramatically more diversified footprint right now for the company. So we're also very, very bullish on Bird Construction.
And then finally, Toromont, a name we might not think, a huge provider of equipment.
Yeah, exactly. So they're the second largest Caterpillar equipment provider globally. And they are in eastern Canada. So whatever is going to be happening, for example, like Alto, the high-speed rail project, which the federal government is pushing for, I mean, the amount of dirt and earth and grading that will be required is going to be tremendous. Anything transmission-related, to a certain degree, even housing coming back potentially. I mean, you were talking about, highest sales in 4 years. All of these things will lead to positive outcomes. And again, Toromont derives 90% of its revenue from Canada. So just by definition, they're in the right spot, in the right geography, where the sentiment around spending is continuing to inflect higher.
Sometimes I wonder, should we just get the Dutch and the Chinese to build this stuff for us? Well, that's another day.
That's another topic of conversation, absolutely.
Maxim, thank you very much.
My pleasure.
Indeed. Maxim Sytchev of National Bank.